Welcome to the South Florida Hospital News and Healthcare Report Leadership and Education Series. Today, we're talking about a great topic for physicians and physician assistants, for nurses, anybody within the healthcare space, and that's talking about disability insurance. And the experts, we have two experts relating to that. We have a friend of mine that I've known for probably about 150 years, is Howard Wolkowitz. Howard is an insurance educator. Howard spends most of his time not selling insurance, but educating people on insurance. And that's why we're talking with Howard today. So, Howard, welcome to our series on
Thank you.
education and leadership. And tell us a little bit about yourself.
Well, I started in this industry in September of 1992, so graded in 3 decades. And the industry has changed, everything's changed. And the thing that is important today is when I got into the business, one of the first things my manager said to me is, you can sell all the life insurance policies you want, but you don't grow up until you deliver your first death check. And that first death check was two checks, actually, to one client, $1.7 million. And I must have spent hours just staring at that check. And that's when I started realizing what I did for a living. And the same thing happened with disability. I sold a lot of disability policies over the last 30 years, but it's really in the moments where doctors went on claim that we had to process the claim and get it approved and get the checks coming, that I began to understand the disability industry. And like most industries, there's a legal document involved, and the legal document involves really definitions of what you're covered for and you're not covered for. And I think the most important thing we can do today is to let the listeners know what to look for in a policy, how to evaluate the different options to see if it's something that you need, want, and can afford.
Great. And I would say to you, and we'll find out today, and you'll introduce Mike, but not all disability policies are the same. And that's a mistake that a lot of people make, that you really have to look at the policy, understand what I would call, as not an insurance person, the fine print within the policy to truly understand what your benefits are and where the pitfalls are. So with that, why don't you with that introduce Mike, who is truly another expert in the field of disability insurance.
We're lucky. Mike, thank you very much for being on. What's special about Mike is 30 years ago, I met Mike when I started selling disability. Mike's been a disability expert for the last 30 years. I think it's probably what he's done his entire life. I actually met him when he was a rep for Paul Revere Insurance Company, which at that time had one of the best disability contracts for doctors that ever existed. So we're actually lucky because Mike doesn't meet with consumers. He's actually our representative. He doesn't deal with the public, but his expertise of the different companies, the different contracts, and seeing people go on claim and seeing who collects and who doesn't collect is very, very important. So, Mike, if you're ready, I wanted to ask you a question.
Well, let Mike talk a little bit about himself before we start off.
Okay.
Well, I do appreciate that, Howard. What a nice introduction. And yes, this really is almost what I've done for my entire career, is covering people in the disability field. And you briefly spoke about it, the need, and I just want to take 30 seconds because so many of the physicians out there really don't understand the need for it. And there are still oftentimes physicians that I run into that have no coverage. In fact, I would say, it's 50-50 or 60%. And so just understanding the need and reflecting for a moment, those listening, what would you do without your income? How long can you last? What truly is your greatest asset? Is it your home, your auto, or is it that asset which enables you to procure all of those things? And even people that are concerned about retirement and they're on track for retirement, the one thing that can hold you back from reaching your goals is, imagine missing just 6 months, 9 months of your income. a relatively minor incident that keeps you out of work that you come back from, but you've had to draw on your savings prematurely, that will destroy most financial planning and most retirement goals. Just drawing 9 months of income out early, you'll never reach your retirement goals. So truly protecting your income is the foundation of all financial planning. I really do believe that. So with that, a little brief introduction of why it's so important, I'd love to get into the contracts. Sure.
Great. So why don't we start off? You're the experts. I'm the guy sitting on the outside. But sometimes the outside guy has those questions that a lot of people who are looking for insurance need to ask. So let me start off by one question. Who needs disability? Okay. And who doesn't? Is a question that I always think about. It's, for those who are believers in insurance and those who are not believers in insurance. Okay. So why don't we start off with that one?
That's a great question. And I'd love to jump in on this one, Howard, if you don't mind, because it
Yes.
ties into exactly what I was saying before. And, people often say, this is something you're only selling until someone's in their 50, 55 range. And frankly, I found that's not true. And I found the easiest way to determine if someone needs it is to ask the simple question, are you ready to retire today? If you're not ready to retire today, you need to protect your income, because as I was just explaining, the single greatest hurdle to you hitting your retirement goals is not how the market does. It is an accident or illness that hits you, which happens to the majority of the people out there, or sometime, not the majority, but, roughly 30% of us, which is a high number between your age and age 65 that knocks you out for even a short term, much less the average. Missing 3 months, 6 months, rather, of 6 months, 9 months of income. Imagine if you're out for 2 years. So if you're not ready to retire today, I've sold policies to 59-year-olds, 61-year-olds, and that's the question I ask. If they're going to be working until they're 70, because they're behind on their retirement goals because of unexpected life changes, it could be a late divorce, could be, unfortunate investments, whatever it is. If you're not ready to retire, you need to protect your income.
And by the way, the cost of protecting your income, roughly 2% of your income, plus or minus. It could go as low as, 1, less than 2. It can go as high as 4, depending on the richness of the contract. So you think about this question. I ask a lot of people this question. If you don't have a mortgage on your house, there is no bank requiring you to get hurricane insurance, homeowners insurance, flood insurance. So ask those people, would you still buy insurance? If you have no mortgage, do you still have insurance on your house? 99.9% of the people say yes. And then when I ask them why, it's because it's that one event that I'm not anticipating, but what would it do to me? And if you think about insurance, it's a risk management tool. I love when I sell life insurance and somebody says to me, as what they think is an objection, I don't plan on dying yet. And my reaction is, that's actually good news, because if you did plan on dying, I wouldn't be able to get you a policy. And it's the same thing with disability insurance. You get disability insurance before you can't qualify. And Mike, maybe to talk about muscle skeletal, how many people end up with back issues or any kind of issues where they're a surgeon, they have to be on their feet, and they can't. Now, if they don't have insurance, they can't even qualify anymore. It's over. And if they do have insurance and you have the right contract, you now have a claim.
Yes, absolutely. It's those, and most people do correlate it to accidents, the unexpected accident that happens, which certainly can be the case, especially the greater your specialty, the greater the requirement for the use of your hands or standing, as you mentioned. And it's actually, though, that the illnesses out there that even outweigh those. The back claims are a good, a decent percentage, but think of all the illnesses that unfortunately people can get, that even if you come back, eventually, you were out for a period of time where you were very sick, you were unable to work, and then you fought your way back through it and you came back. So there's really those two sides: accidents and illness, mental, nervous, alcohol, drug claims that can pop up. There's a range of things that happen, unfortunately, out there that can keep us from being able to work.
And all of those, listening to you, all of those relate to the definitions within policies. So why don't we take a little time out and talk about the difference between definitions and policies? And as I started off, not all disability policies are the same. So why don't we just take a little time and talk about that?
That's great. So Mike, the ONOC, I think, is a good place to start, because
Can you
there's so
define
many.
that? Can you define that for the listeners?
Yeah, Mike, I'll let you run with it and then I'll jump in.
Sure. Own occupation is, or specialty own occupation, even stronger, is defining, it's really, I guess, would say the basic foundation of how you go on claim. If you are unable to do one or more of the important duties in your specialty, that's the, those are the definitions that you want to look for. Specialty own occupation. So that if you cannot do your specialty, but you're still able to work somewhere else, you can be on claim. That's the strongest definition, the tightest, the least loopholes. So that is what you are looking for in most policies.
And not all policies have that type of definition, I would assume.
That is correct. Absolutely. So that is one area where you would look for, especially as a surgeon, as radiologist, some of the other specialties where you really are more dependent on being able to stand and use your hands, some other functions that where a smaller, relatively smaller disability can knock you out of your specialty, but it might not knock you out of the, general physician. You want to protect all those years of schooling, all those years of hard work in your specialty.
Mm-hmm. Now, let me run something else by you real quick. What about those insurance policies that doctors might have because they're part of a large medical group or part of an employed hospital, and they come in, one of their benefits is, well, don't worry, you have this group disability policy, which is really great. No worry, we got you covered. What are those pitfalls for some of those doctors?
Okay.
That is a great, Mike, before you answer it, this is a very interesting question because it's got a couple of moving parts. Number one, you got the ONOC and working, ONOC and not working. Number two, a lot of people don't understand the differences between a group and individual in terms of not only definitions, but portability.
That's exactly right. And there's actually quite a wide range of issues with the group insurance, and that's what keeps the cost down, which makes it, attractive for employers to provide it. Still a great benefit, nothing wrong with group insurance at all. It's just that you definitely would like to supplement it. Now, let's go over some of those inherent weaknesses in group coverage. First, well, let's go over the benefit. First of all, it's provided by your employer usually, so it's just a great benefit to start off with a baseline of coverage. All right, it was never designed to be a catch-all. It's designed to be a baseline of coverage. So it rarely has even own occupation in it, although many companies do offer a version of that, which is own occupation, not working in another. So if you cannot do your job and you've chosen not to go back to work, but even that strong definition is rare in the medical, employer paid group field. It's more likely that they're going to want to send you back to work and rehabilitate you to do something else if you cannot do your specialty. All right. So that's the first problem. The other problems is that there's a lot of things that they just define as not claims or not long-term claims. And the things that are difficult to prove, which can be, some back claims. Mental nervous is usually only back claims, mental nervous usually only covered for 2 years in 90+% of cases, and just other things that are difficult to prove. So once those are taken into effect, what are the other drawbacks? And that is, there's a great acronym that'll help you remember it. It's TIM, which is taxes, incentives, and maximums. Group insurance is taxed because it's employer paid. So you think you're relying on a certain percentage of your income, which is typically 60%. And then you find out after taxes, what are you really living on? Much closer to 40%. And that's a first shock. The second shock is that incentives, the other part of the acronym, incentives, bonuses are almost never covered. And more employers are putting income into bonuses by having you get paid more through those incentives so that they don't have to pay all the benefit costs on that portion of the income. And lots of times they'll have contract thresholds, and if you go above that, you get lots of incentives. Lots of physicians now with those, not covered by the group insurance in most cases. Finally, the last one is the maximum. What is the group cap? I've seen hospitals with as low as 10,000. 15,000 is fairly common. Above that is extremely rare. So what is your maximum? 60% to what? And then do you get hit by one or all three of those issues, so that you thought you had maybe 10,000 a month coming in, but you realize after taxes, it's only, 8,000, 7,500 or so. What about those that have high bonuses, et cetera? The higher your income, the more it's going to affect you. So in short, it's a great benefit. It's providing a base level of coverage. It's not portable, so if you leave somewhere else, you're going to lose it. You need to put in an individual policy to fill the gap and give you a proper amount of coverage. It's going to cost you even less than the 2% because your employer is subsidizing some of your costs through their group plan. So take a moment and look at what your group coverage is, and then look to supplement that.
So Mike, on an individual policy, you can cover your salary, your 401k contribution, your bonuses. What else?
That pretty much would cover it. If you own your own business, K1s are covered as well as part of income. Yes.
So let's talk about coverages.
The benefits on an individual policy, I'm sorry to interrupt real quick, are tax-free because you're paying for it individually, which is also nice. Yeah.
So let's talk about coverages, because I know you kind of stepped into that bucket there for a second. So let's talk about the coverages that you're seeing now, that a lot of doctors could be suffering from now, and that is mental illness, nervousness, stress, and burnout. A lot of that are not covered in current policies, depending when the policy was bought. And if you're buying a policy, if you buy the wrong policy, a lot of that will be excluded. So how does somebody know really what they're buying within a policy, and where do they look for that?
So if there's an exclusion section, some of the definitions, you just need to read the definitions to get how they're treated and how strong they are. But the limitations are easier to go into and just look. You can look at the exclusions that'll come on any quote or any contract that you would get. And if it has a 2-year limitation for mental nervous, I do believe that it's a very strong benefit. When you can get it, you should look at it. Yes, it's an additional cost, but stress, anxiety, it's one of those things that you say, well, it's never going to happen to me, so I don't need that. The reality is you don't know. I mean, people think, and then suddenly something happens in their life and their stress and anxiety, shoots up unexpectedly. So having that and in your contract is extremely important.
And Charles, the medical journals, magazines that we see, how many articles are there in a given year about Dr. Burnout? How big an issue is it? and think about what happens when you can't work or what happens when you should not work. So if you're a surgeon and you have carpal tunnel or you're shaking or something where now there's a potential malpractice issue, but you have to work because you're not covered. So what are you doing? Are you increasing your malpractice exposure because you have to work because you don't have that coverage, or you have the coverage and you utilize it? I have had clients who have gone out on stress, very simply, and there's no replacement for having that definition if that happens.
And let me, and we're getting almost to the end of our time here before the meter runs out. Or so let me run one kind of final question by you. Dealing with a sales professional in this business, it's tough to find sometimes the right person that really understands the business, that is more concerned about the education and making sure you know what you have rather than just selling you a policy. And I don't need names, I don't need dates, I don't need anything. But how would you look at a professional, for instance, if you're looking at a professional for a CPA, if you're looking for a professional for an attorney, if you're looking for a professional as a doctor, you look at the background of this individual and see what they have, see what they know. Tell me how a person in looking for insurance can do the same thing. Tough question, I know, guys, but that's I like the tough questions.
Mike deals with hundreds of me, so he'd be a better person to answer that.
Well, I would say look at objectivity then. I would say an independent person out there would have absolutely no issue with providing a couple of quotes up front to go over a couple of options. If they, under rare circumstances, would I ever give someone just one single quote? We almost always send out at least 2 companies, so that then oftentimes 3 or 4, because some might have a small advantage here or there, or the price might be a little bit higher, but then you can explain perhaps, why you feel it's justified and because of certain definitions. So if you had to distill it to one thing, I would say, are they really just showing you one company for everything? Because that's usually not, it can be the right answer, but I would say it's probably not usually the right answer.
In most cases, selling an internal policy or just one policy, not necessarily being able to compare is not the best case for somebody to look at insurance.
If you were to distill it to one thing, I would say that, yes.
Right.
Yes.
Howard, your experience in doing that, same thing?
Well, you called me an educator up front, and I think that that's the answer to the question. You don't want anybody selling you anything. You want somebody educating you and understanding what your needs and considerations and identifying the right company and the right product. So I'm going to leave with something that I'm more sensitive to at this stage in my life, and that is medical underwriting. There's no such thing as fogging a mirror and getting insurance. Those days are long gone. With the advent of doctors pushing prescriptions for everything, people complaining about everything, the hardest part of my business today is only one thing: medical underwriting. Until I get medical records and I really see what I have to deal with, I'm not even comfortable picking a company, because I don't know if their underwriters are the best underwriters for somebody's profile.
That was my last question, but I got one more for you. Okay.
Sure.
And that is for those who have had policies for 10, 15 years. Okay. Circumstances have changed, hopefully for the better, over the years. Do you believe, and I know what the answer is, but I'm going to ask it anyway, do you believe that at what point in time should policies, disability policies, be reviewed and reevaluated over a period of time? Is it 5 years, 10 years, 15 years, change of income? What is that sweet point, that says we need to really take another look at it? And it may be okay. You may be able to increase coverage, maybe a lock in as far as rates, but shouldn't there be a point where there may be a better policy based on their current situation that they maybe bought 10 years ago?
So Howard, do you want me to jump in here?
Yeah, jump in, because you and I probably have different perspectives of that particular question.
Absolutely. I'll start then real quick. It's funny because I often think of physicians who say all the time, you need to come in for an annual checkup because every year, right? And but then I ask them, when's the last time you looked at your financial, or did a financial checkup? And it's been 10, 15 years since they've looked at they have whatever they had when they were a resident. So in general, I would say this: if their contract is very old, and as long as they got one of the better companies, you almost never replace something that's that old, because the provisions are so strong with this type of contract that the rates are locked in. So the younger you buy it, the cheaper it ends up being, and your rates never go up on the portion that you purchased. Mm-hmm. However, how long ago did they buy it? And usually they're really underinsured, and they haven't looked at it in years. Their income has gone up, and they have not kept pace with that. Sometimes I will run into an old contract that was not well chosen, and we can look at replacing it. The cost obviously is much higher, so then we have to weigh the pluses and minuses in that. Not so much so if it's just 3-4 years old, but older contracts. So that's kind of a quick answer to.
Okay.
No, that absolutely is a very accurate answer, because I would say my average doctor client has probably an average of 3 disability policies. And it's because of Mike said, you very rarely can replace or should replace a policy, because the definitions are strong if it's an older policy, and you're locked into a premium at that age, and it's guaranteed for your whole life. So what happens is, I have doctors who, every time they get a substantial raise, I don't even have to call them. They call me up, I got a raise. All right, send me your W-2. And all of them I buy guaranteed insurability. So they don't even have to go through medical underwriting. They just need to give me either a letter of their new income, or pay stub, or W-2, and I buy them more coverage. And they're good.
So I think the answer would be 3 to 5 years, every 3 to 5. It doesn't have to be annually.
Right.
I just use that analogy, but every 3 to 5 years, people's incomes are generally changing enough.
3 to 5 years, or a major event takes place.
Yes. Change in job. What's the new group coverage? What's the new income, or a large raise? Yes. Yes. Yeah, absolutely.
Right. Okay. So
by the way, Charles, I just want to tell you something. There's one additional benefit that never existed in the history of insurance. It's the family care benefit rider. And if Mike can just share that, I think it's unbelievable. I never pictured a disability policy having a rider like that.
Okay.
It is very nice. Yes. And it's actually, the company is, I know we're not naming companies here that much, but this specific one, there's only one company that adds this in, and that is the standard. And I hope other companies adopt it, because it's very nice. And in short, what it does is it allows you to, if you have a family member who is, becomes very sick and needs care, you can take time off and still qualify for a claim to go take care of the family member.
Really nice.
Yeah, for a period of time. Yeah.
Right.
Yeah.
So it's almost like a short-term disability within a long-term disability.
Yes, but used to help with the family member, kind of.
Oh, great.
Yes,
Great.
It's actually very nice.
Mike, what about children? If you have a child, a child that needs you to be home, does that qualify too?
Yes, you want to look at the provisions, but it's any close family member, grandparent, spouse, child. Yes.
even
Nice.
parents.
Yeah.
That's
So
great.
if your parents don't have long-term care,
And you need to
And-
take time off. This can help.
and because they can't afford a caregiver, you can take time off and take care of them and be compensated.
That's correct.
That's great. It's a great benefit. Again, a lot of this, hopefully, people will look at it and ask the questions. So if they do ask the questions, Howard, why don't you give your information out now, just if they have any kind of questions that they'd like to ask?
I'm gonna give you my cell phone, and anybody can call me at any time for any reason, even if it's just bounce off what they have or what they've been approached with. It's 954-558-3673. This is not an issue of emails and back and forth and sales pitch. This is when you're in the midst of considering a policy, you need to talk to a couple of people, make sure you understand what you're getting into, because as I said at the beginning, this is a legal contract. And you can't go back and say, well, the agent told me I was covered for this. Doesn't matter. Only thing that matters is the terms of the contract.
So the bottom line is, I want to thank both of you guys for coming on today. The bottom line is, if you're looking for insurance, first of all, deal with somebody first who you can get some education about insurance policies and how they work and what's the right way to go, and then deal with somebody who's going to sell you the policy. Because if you don't know the right questions to ask when somebody's trying to sell you a policy, I would say most of the time, you're probably going to get a policy that's not going to fit your needs. So deal with a professional that's been around for a while, not somebody, and I maybe get slapped for this one, but don't deal with somebody who's 23 years old and just came out of school and is now selling insurance. Deal with somebody who's been around the block a few times, dealing with a lot of insurance policies, a lot of situations to protect yourself in the future. And with that, I want to thank everybody for watching and tuning in to our Leadership and Education series. And we're going to be doing a follow-up of the of disability insurance and other insurance products in the next probably 30 or 40 days. So with that, thank you much for tuning in, and we'll see you next time. And this is Charles Felix with South Florida Hospital News. And again, we'll see you again soon.